Good morning, everybody. It's Friday. Looks like we made it. It's finally the end of the week. This is the Morning Blast. I am Ryan. He is Michael. We are very unashamedly abashed our market updates and news updates. What's been going on in markets? A rant about a specific topic of choice. And today it's the Congress funding bills that need to be cleared, and we'll get a lot of shutdown talk in the next couple of days. So we're trying to get in front of that and give you a bit of info on that. As you know by now, all this goes out completely unedited, so apologies if you hear shit, fuck, or bugger. Nothing we say is trading or investment advice. We're here to put a smile on your face as much as to add value into your day. So we hope we're giving it a little bit of a different spin to the normal people that take it a little bit too seriously. Would you agree with that, Michael?
I would indeed, yes. A very good morning to you, Ryan. Good morning, everyone. And very happy Friday. It's been, well, I was going to say a relentless week. I think another relentless week.
Quite.
We certainly haven't had a slow start to the year, have we?
No, very much so. No, exactly that. It sounds slightly echoey where you are. You in the office on a Friday?
No, I'm not. I'm sat at my desk at home, actually.
Oh, sat on the toilet. Okay, that's totally right.
No, none of that. I don't know why it's echoey, to be honest. I was having a problem with my headphones earlier.
I honestly thought for a split second you were saying I was having a turnout. But there you go.
Oh.
Right, anyway, enough of that.
How you said we do things, like differently to those who take it too seriously.
Well, maybe there's a reason why no one else does it like this.
It could well be.
Right, let's tell you what, let me crack on now. Clive's back from Australia.
I was going to say, is Clive up and running again?
Yeah, I've remembered to check my spam folder. He can remain in there on the naughty step. So as usual,
where he belongs.
Exactly. As usual, market wrap from our good friend Clive Lambert at Futures Tech. So equities, not just equities, so markets, where they're going, levels to watch. US equities recovered and rallied yesterday. It was a bit of a mixed on this side of the pond, although almost inevitably the FTSE set another new all-time high. And to remind people, this has nothing to do with the Labour government. It's if anything, they're the ones holding it back, although it is not a domestic market. There we go. Bund futures, German government bonds fell to build on Wednesday's move through 128.34. So we're still waiting for the bulls to get going there. Euro dollar, that saw red again. The potential head and shoulders sell signal would be triggered on weakness through 115.20. So still not there yet, but one to keep an eye on. Cable dropped back through its 200-day moving average, hinting at further downside potential going forward. As me and Michael have said many times before, like the significant moving averages are kind of one of the few technical indicators that we personally like looking at. But, do your own thing, get your crayons out, do whatever you want, really.
Get your Elliott waves out.
Just a friendly reminder: if you have got so much faith in Elliott waves, this show isn't for you.
No, definitely not. Fuck
Bitcoin.
Off somewhere else.
Yeah, exactly. Piss off. Bitcoin. No, we love you. Like, honestly, still listen, please.
We need the figures.
Yeah, we need the figures. Look, just sit there and take all the abuse.
Just put us on mute. It doesn't matter. Just stay on the channel.
Just tune in. Bitcoin, that shied away from its Fibonacci resistance at 98,000. Gold and silver still look bullish despite taking a few days off. I think can't exactly call it a bear market. Base metals are offered overnight, but nothing trend changing. They're all still bullish looking charts pretty much across the board. WTI and Brent, they failed to sustain the recent gains and are pointing lower once more this morning. Henry Hub, the US gas benchmark, made another new low yesterday, but posted a doji. So maybe the bulls have steadied the ship there for now. Maybe. One to keep an eye on the weather front on that. All we need is a couple colder weather forecasts coming in on the European forecast and stuff. When I say European forecast, I mean it's a European model that they use over there. So it's not like they don't care what weather is in Germany. That. Just clearing that one up. EU carbon markets, this is one of Clive's specialties, posted a reversal candle yesterday, a shooting star, mate. So maybe that recent good run has hit the buffers for now. TTF, which is European benchmark gas, kind of hubbed in Holland, put more green on the chart and is now testing its 200-day moving average on the upside at 33.80. And finally, from Clive, soybeans have found support at 1,037.6 twice in recent weeks now. A move above 1,071.2 would signal a small buy. Well, it would be a small buy signal. And that's it from Clive. What's been occurring, my good friend Michael Brown?
Good stuff. Thank you, mate. Thank you, Clive, as well. Clive. Where are we this morning then?
I'm in Whitstable.
Well, I was just mulling over where to start. Let's start with BOJ, actually.
Yeah, loads
because
of.
obviously oh, Christ. There's a lot of focus on Japan at this moment in time. Obviously, an early election or an election next month seems pretty much certain at this point. But we have seen the yen reverse course, actually, over the last couple of trading sessions. We've had increased jawboning from the Ministry of Finance. The Finance Minister Katayama overnight was talking about how the US-Japan trade agreement allows for FX intervention, and there's also some speculation that the US might actually help out with that intervention if the Ministry of Finance were to pull the trigger. And we've also had some relatively hawkish sources stories from the Bank of Japan. Bloomberg yesterday noting that the BOJ is now paying more attention to the economic impacts of a weaker yen than they have previously. And then Reuters, citing their own sources overnight, were noting that while the BOJ are likely, if not certain, to leave rates on hold at their meeting next Friday, some policymakers on the board see the scope to raise rates as soon as April, given the potentially inflationary impact of that weaker yen, which has also given dollar yen a bit of a kick lower, testing 158 to downside as I speak. And of course, that has resulted in hawkish move in money markets as well. We now see the first 25 basis point hike fully discounted by June. That had been all the way back in September, a little bit earlier on in the week. So the yen is continuing to chop around all over the place. Sticking with central banking, on the Fed, the White House press secretary Caroline Leavitt, she was saying yesterday that Trump likes, and I quote, a few
Big
people, a few people for Fed chair, and that an announcement will come, and I quote again, in a few weeks. I remind you, of course, that this announcement was originally due to come before Thanksgiving, which is now almost 2 months ago, and that Trump has been saying that he's decided who it is, but all of his sort of aides, for want of a better word, are saying that there's a few people in the running. One of those people in the running, of course, is NBC director Kevin Hassett. Kevin Hassett said on Fox Business yesterday that he is sure and confident that President Trump wants an independent Fed, that if he were picked as Fed chair, he believes he is tough enough to win any argument on the Fed board, to which I think was met with absolute laughter on trading floors across the world as that headline came through. Moving on from that, just a few other bits and bobs I wanted to mention very briefly on sort of geopolitical international relations, quite a lot going on, all of it involving Trump, of course. The US and Taiwan have reached a trade deal that lowers tariffs to 15%, and in exchange, Taiwan pledging to invest $250 billion in chip investment and also provide $250 billion worth of credit guarantees as well.
Just on this, if I may, we've said many a times that it's basically a win-win for a country to come out of the traps and say, oh yeah, we're going to do this big investment deal. Trump's happy because he's got a good headline. The country in question's happy because they've made Trump happy, basically.
Show us the money.
But show us the money, and where is the money? And we mentioned a few times towards the end of last year that there's a lot of these mega deals coming out, but show us the receipts. Saying one thing and doing another is not following through is completely different. All fart no poo. To follow a quite a highbrow analogy that I partake in. And just on this note, it came out this morning on the PIQ newswire that South Korea, who planned or who kind of announced under a fanfare at the end of last year $350 million worth of investment, they're now saying, after going quiet for a bit, that it definitely won't be in H1 2026, and they haven't really got a timeline for it. So already, as soon as you get that headline out of the trap, it's no one really cares what's been invested. And I think this isn't just a case for these national investments, which at the same time, remember, me and Michael have said this in the past, it's not the country investing that amount. They're basically promising that private industries within their country are going to invest that amount, which is a lot more difficult to kind of strong arm your companies to do that. But
yes,
we're also seeing it, and it's the same thing that we're seeing in AI and stuff. Like, OpenAI announcing, $500 gazillion deal with so-and-so, but you look through the small print, and it's all basically just letters of intent all the way down that have to meet, something has to go perfectly with all these criteria met for X amount to be unlocked, and another thing needs to be met for another 10 million to be unlocked or 10 billion to be unlocked. So, we are living in...
The other thing with that, in addition to what you say there, which is absolutely spot on in terms of, this sort of came to light with Japan and South Korea, where, they signed the trade deals and then almost immediately turned around and went, well, we can't actually promise this amount because it's all coming from private enterprise. The other thing is, and I don't know the specifics in terms of the Taiwan deal, I haven't had a chance to look into it, is the timeframes that are involved. Because a lot of these are talking about, 200 billion or 300 billion or whatever it is over 5 years. At the end of that 5 years, Trump won't even be president anymore. And by which point we'll probably have forgotten about the whole thing anyway.
Well, it's over 5 years and subject to terms being met. I mean, there's a lot of caveats in this. And again, it's not just, it's not just a story regarding, governments trying to sweet talk Trump, but we're seeing it massively in AI. And I just think it's something that people must be aware of because, when someone comes to do the receipts in a few years' time, I think there's going to be a lot of billions missing.
It's also one of those things that, and I don't like saying this because it sounds like I'm stating the obvious, but it doesn't matter until it does matter. But what I mean by that is, markets, when they're in this kind of euphoric mood, particularly in terms of AI, it's just a case of all CapEx is good CapEx. Meta's spending 10 billion, Google's spending 20. So the 20 is bigger than 10, which means Google must be better. That's basically to distill the mindset that we've had for the last year or so. At some point, that may change. If you start to see companies issuing warnings around the time frame over which they'll get a return on this investment, if you see macroeconomic conditions sour, if you see monetary conditions tighten, all of a sudden all the questions that everyone just kind of forgot to ask or couldn't be bothered to ask, they're going to start asking them pretty quickly, and you could then see that come back to bite people. I'm not saying that's a base case, it's just something that is very, very important to keep on the radar as a tail risk. Moving on from that, just briefly, a few other bits and bobs in terms of geopolitics. Trump looks to have continued to kind of step back from the potential of imminent intervention in the Middle East. He was talking on Truth Social again yesterday, noting that it is good news that Iranian protesters will not be receiving the death penalty and that he hopes that Iran refraining from issuing the death penalty will continue. That's very much in line with the commentary and the comments he made on Wednesday evening in the Oval Office. Predictably, we've seen crude continuing to barrel lower as markets price out a degree of geopolitical risk. WTI is back under $60 this morning. And just lastly, in terms of speaking of crude, US forces seized a 6th oil tanker yesterday, which is, of course, as they continue this crackdown on dark fleet tankers coming out of Venezuela and going to, well, wherever they may be going. There was also an interesting article that CNN put out this morning. Do have a read if you get 10 minutes or so. The nub of it is that the proceeds of these oil sales from Venezuela are not being sent to the United States. They are being sent to Qatar. And the reason for that is because there is a concern that if the 50 million or whatever it is that they've sold this oil for ends up in the United States, all of the companies who had all of their infrastructure seized many years ago under the Chavez administration could start putting forward legal claims to those funds. So they are basically keeping it offshores to stop, ExxonMobil and Chevron suing the US government.
So TLDR, the US government are keeping money offshore so they don't have to pay out to US companies that got fucked up the arse before.
That is correct, yes, and very eloquently put.
Well, it's why I'm here, right? It's like, as we've said in that, well, it wasn't us that said it, I think someone else said it originally, that this podcast tailors to all levels of brow. I think you need to guess which brow is covered by who.
Yeah, we don't need to explain that one. Just lastly from me, I did just want to mention, we'll rant about this another time, I'm sure, but the ONS, we've got a couple of weeks without the ONS having a complete and utter shambles. They are in shambles once again.
Yeah.
Of course, the ONS have had a litany of issues collecting UK economic data, and that's all data, by the way, whether it be jobs, inflation, growth, trade, whatever. It was the labour market issues that's kind of started all of this off when the survey response rate in the labour force survey fell to 15% or whatever it was in the middle of 2023. For those who are unaware, we then went through a period where the ONS just didn't publish any data on the UK labour market because they simply couldn't collect it. They've now gone through this very long-winded process of basically revamping the labour force survey to try and make it somewhat accurate. This revamped survey was meant to be released in November of this year. However, it looks like that is going to be delayed by as much as 6 months, according to Bloomberg, citing people familiar with that matter this morning. That means that the new labour force survey, i.e. accurate or hopefully accurate UK employment data, might not now be rolled out until the middle of 2027, which quite frankly is scandalous. And it would mean that we would go basically 4, if not 4.5 years without accurate data on the state of the UK labour market. I am not someone who is inclined to feel sorry for policymakers, whether they be at the Treasury or at the Bank of England. But I think we do need to perhaps just cut them a tiny bit of slack, given that their own statistics agency can't actually tell them what's going on in the labour market.
Indeed, and as we were saying on WhatsApp, I think we need a proper chinwag on this about the state of the ONS and BLS, etc.
Yes, and we will do that at some point very soon.
Well, we basically, I tell you, if listeners hear us talking about that, it's because we can't think of anything else to talk about.
It's because there's fuck all else going on. Yeah. Well, that's sort of one step above Ryan telling jokes in our last resort contingency plans.
Whoa. There's no need for that. Okay, here's one. What do we want? Airplanes. When do we want them? Now. So, there you go. It's better when I do the arm movements. You need to be in my presence so I can do the arm movements.
We do not need this on video. That is.
But the sad thing is, I actually did the arm movements and then realised that no one can see me.
Are you moron?
I actually put my arms out as wings, and then I was like, Ryan, you need to have a word with yourself. But I can do. I'll do it again down the pub later. Right,
that's made my day.
Anyway, right, moving quickly on. What are we talking about today? Well, Congress. Oh God, I know I'm being mugged off by Zach on WhatsApp for my awful jokes. Oh, quickly, last one. What do you call a dog that can do magic tricks?
Oh, I don't know. I'm going to be barking up the wrong tree, whatever I say. So.
A labracadabrador.
Fucking hell.
Right.
By the time we get to this, the government is going to have shut down, right. I think.
Well, look, no joke at the end then. You've had your joke quota. Right. Congress. What's going on? Well, they've got 14 days left to basically get some funding bills over the line. We're going to have some more shutdown talk. Congress is back from recess and staring down another funding cliff. The good news is they passed half the spending bills, so the shutdown would be less catastrophic than, well, not that October's was catastrophic, but there you go. If you remember, October, we had 43 days of government shutdown. I don't think anyone really noticed.
But apart from the people who weren't getting paid.
Yeah, but if they're sat at home, I'm sorry, they'd be listening to us anyway. The bad news for this is the 4 remaining bills are the hardest, most contentious ones to get through. And the Senate just has 5 working days left to do it. Nobody's talking about the 21 billion funding gap in the defence bill because everyone's distracted by the ICE drama. And the ICE drama is important because one of these bills that hasn't gone through yet is specifically related to ICE. So, I think I'll hand over to you in a second, but I think we just do need to caveat this with 99% of the commentary you'll see on social media about the US government shutdown is bollocks, and it's hyperbolic bollocks at the best of times. So hopefully we can add a bit of, to calm things down and give you kind of some more facts on that front. But go on, over to you.
Yeah, well, I think, as you say, a bit of context is important because they have passed in the Senate and in the House 50% of the bills that need to be passed in order to fully fund the government through to the end of the fiscal year, which is, of course, the 30th of September. I think the 2 issues are, first, as you say, they've left the contentious ones until last. Yeah. The second thing is that actually, if you look at discretionary funding, although they've passed half the number of bills, so 50% of the departments to stay open, actually about 75% of discretionary funding still hasn't been sorted out. So in terms of the proportion of money that actually needs to be spent, they are well behind where the sort of headline metrics would suggest. They are looking to make progress on this one. I think, unsurprisingly, they're going to get kind of the easy ones done first, with senators being set to vote on a package funding both the State Department and the Treasury Department at some point next week after they come back from a long weekend, which of course doesn't help matters particularly much. But I do think we are going to see increasing chatter around a potential shutdown as we move forward to that deadline, which is of course at the end of the month, because the reason the government shutdown ended in mid-November was because they struck that sort of temporary 2.5 month long funding deal. There is, frankly, three ways that this can go. Ultimately, the most obvious thing is that nobody agrees on anything, and we do have another government shutdown, which obviously we can't entirely rule out. As you rightly alluded to, I think if we were to have another shutdown, it would be considerably less disruptive than the one we had in November. Certainly from a financial market perspective, we have the Commerce Department has been funded, the Justice Department has been funded, Energy Department has been funded, etc. So we get all of the data that we're used to getting, is what I'm saying on that front. You then have...
Sorry,
go on.
just if I may. So on the defence one, I think the interesting thing here, and this is why I think something might, again, I'm gearing myself up to get a lot of egg on my face, but given what's going on, in the world, obviously with, the US and the military actions they're taking and, and obviously boarding of the Venezuelan things, obviously things might be kicking off in Iran, all this stuff. Bearing in mind in the last government shutdown, I think they furloughed 334,000 workers in the Pentagon. Of course, you're typing very loudly.
Sorry.
They furloughed 334,000 workers, so over 250,000 Pentagon workers alone in October, right? Do you really want to do that when you're... I'm no marine biologist, so I don't know if these guys were needed over when you're kind of looking to invade countries and whatnot. But it just seems a very dodgy. It seems like a very bizarre time to be furloughing people in the Pentagon when you've got all this going on in the world.
It does, but I think there is a way that you can basically force people to work without that.
Okay, fair enough. Or it'd be some kind of war act or something like that.
Yeah, I'm not an expert, but I'm pretty sure if you dig into all of the sort of departmental contingency plans, they can classify people however they want. And especially now that, I think it was the 2018 shutdown, they then passed a law afterwards which guarantees everyone gets full back pay. So it's almost a case of, you're kind of working for free, but you're going to get it eventually. So just to kind of wrap up on that one, I mean, if we don't have a shutdown, there's basically two ways to prevent that from happening. Either they fund all the departments they need to fund, which is, as you just said, there are sticking points, particularly over the Department of Homeland Security, which is taking the lion's share of attention. If they can't do that, then of course they do have the issue of the option, I should say, of passing another stopgap bill, or what they would call a continuing resolution, which would, again, just kind of kick the can down the road a little bit, keep the government open, prevent a shutdown, give them a bit more time to conduct these negotiations on Capitol Hill. So we are going to hear, I would imagine, when the Yanks come back from Martin Luther King Jr. Day on Monday, obviously they'll be back on Tuesday, I would imagine that the sort of volume of headline noise on this front is going to ratchet up quite considerably.
Yeah. Just one thing I want to stress is that government shutdown does not infer government default, because
they're two very different things.
That is something that really, really, really pisses me off when I see people that do that just for the clicks. So just before we hand back to Michael so he can give us the rundown what's looking forward to today, just wanted to flag on this subject. So just a misconception and a risk regarding this. Misconception that we might hear regarding the government funding issue is that the DHS is the only problem, bill because of the ICE element. That's not true. As we said before, the defence has a $21 billion gap between chambers, and it's the largest discretionary bill. If defence gets stuck, it's a bigger mechanical problem than the DHS political drama, and White House posture on spending levels also remains unclear. And also a risk that some people might be trying to shout at you is that another shutdown would be just as bad as October. And as we've already spoken about, half the government already is funded through to September. That's SNAP, the VA, the USDA, all secure, but remaining shutdown still affects defence, air traffic control, and 2 million federal workers. So it is less severe, but that does not equal it's a minor thing. So just two things to be aware of there. And the third, if you include the fact that it's definitely not government default time. Anyway.
Yeah. Just as one last thing, just on the debt ceiling, because obviously, as you say, people do get the two things very, very confused. Think back to last year, the one big beautiful bill that went through Congress, that boosted the debt ceiling, which is not a ceiling because it gets moved higher all the time, but it boosted the debt ceiling by $5 trillion. So I think from memory, that's about 42 trillion now. And I saw something the other day saying the US national debt was 37 trillion. So we are some way off that being a problem, and do not get the two confused. Just because the government shuts down, or if it shuts down, the US will, of course, continue to fund its debt obligations.
Yeah, exactly that. Thank you very much.
But yeah, in terms of today, it's a pretty barren economic docket, to be completely honest with you. We have some final inflation figures out of Germany at 7 o'clock this morning, which were completely unrevised from the flash estimates. And the only other thing of note is at 2:15 this afternoon, London time, where we get the latest industrial production data from the United States. Production seen having risen by 0.1% on a month-on-month basis in December. That will be half the 0.2% pace that we saw in November. But I cannot remember a day when industrial production moved markets in a significant manner. Having said that, there are a few things worth bearing in mind as we move in towards the weekend. Three things, in fact. Firstly, the FOMC will be beginning their pre-meeting blackout period at close of play today. Before that blackout comes into effect, we are due to hear from 2028 voter Collins, as well as board members Bowman and Jefferson, all of whom will be making remarks this afternoon. Markets, of course, pricing basically no chance of any action at the January confab, however. Secondly, beware the potential for gapping risk over the weekend and on the Sunday night, Monday morning reopen. Of course, geopolitical tensions have been dialed down a little bit, I guess we could say, but there is still a lingering risk that something could happen in the Middle East over the weekend, particularly given, as we know, the Trump administration have demonstrated something of a desire to conduct this sort of thing over the weekend in recent operations. So I'm not sat here warmongering, but certainly it's probably not a weekend where I'd be sat there at midday today going, I'm going to stay short crude until Monday morning. Let's put it that way. And lastly, as I alluded to earlier on, bear in mind that cash, equity and treasury trading in the United States will be closed on Monday for Martin Luther King Jr. Day. Of course, that means that liquidity will be like my barnet everywhere else,
Thin and
wispy for markets at large. So it could be potentially a bit of a sluggish start to next week, depending, of course, on any weekend news flow. But other than that, I think that is probably all from me for this morning and for this week.
Wonderful, Mr. Brown. Wonderful. Michael, if you are around later on for a beer, myself and actually Zach might even get around for a beer, so give me a shout.
Oh, crikey, a special occasion. I might actually be around, so I'll
in the
let you know.
city as well, so not as far for you to travel. In the city, I'm not West End.
Oh, consider it.
I'm going to slum it with the poor people. But listeners, whatever you're doing today, stay safe, keep it tight. We both, myself and Michael, do both wish you an exceptional weekend. And come back and see us on